Hey everyone, Rich from the Active Trader Room, coming back to you live with the daily recap. Instead of going over just ideas and individual plays, today I wanted to cover a topic that's near and dear to my heart, and that is moving averages and how they can serve you as a tool of when to time in, how aggressive to be, and what your participation should be in the market at a given time. Now, the moving averages we'll talk about today are the 8 and the 21, and they serve as a very handy tool in the short term. You know, if your holding time is days to weeks, the 8 and 21 do a great job of telling you what is the trend, is it up, is it down, is there no trend, and based on that you can make decisions on how much capital you should use, and also what your time frame should be, how many positions you should have on, and such difficult questions that if you're not using the moving averages, I don't know how you would really answer them in a logical, objective manner. I'm going to flip up now to the spider chart right now, and I'm going to bring up the 8 and 21. My blue line is the 8 EMA, the red line is the 21 EMA, and this chart goes back, way back to October 2013. And you can see whenever a shorter term moving average is above the longer term moving average, so whenever the 8 is above the 21, that is indicative of the bulls are in control and there is an uptrend. So my mouse right here, just follow it right here. In October 2013, we see nice long periods of the 8 above the 21 and also nice slope on the moving averages, nice pace, meaning they're steep. They're not flat. They're in a strong uptrend. If I dropped a little ball here at the end, it would just roll down. This was a nice trend in October 2013. We could just see how dips are bought and we just stair step higher. And there are definitely wrinkles when you'll see the 8 cross below the 21. And at that point, you have to tell yourself that something is changing. Whenever the short-term moving average crosses below the longer-term moving average, like the 8 below the 21, that's considered bearish, more neutral, and the trend is breaking or possibly just changing. So you can see, an example of this would be the early part of this year. We had the 8 knife through the 21 EMA, and this is when things started to become a little bit more tricky. One other thing to note is, many times the area of where the cross occurs can act as support or resistance in the future. So make sure you take note of, is the 8 above the 21? What's the slope like? What's the pace like? Because once the slope and the pace begins to flatten out, that can proceed and cross down, which is bearish. If you're a bull, that's not good. So where are the spiders at right now? Basically from May, we had this nice little uptrend, started to get a little flat up here, and as of basically end of July, beginning of August, we saw that cross down. So that should flash in your head, okay, something changed. This should be the warning sign. This is probably, from a practical point, you know what? I'm not going to swing trade that much. I'm going to look for two-way action versus the whole way up. When you have the 8 above the 21, good pace, good slope, you could have swing positions on, maybe 4 to 5 positions on. You can day trade looking for bull flag breakouts, looking for price pattern breakouts. You can buy strength. You can trust dips to buy when the 8 is above the 21 on the spiders and the overall market in general. Once you get this cross down, this should flash a warning sign as something is changing. So right now, the 8 is below the 21. It hasn't been this way for that long, maybe a few days, a week or two now. So it's not like we're in a downtrend now. I would call this more of a neutral type pattern, to where now we have to see how do they react into the 8 or the 21, because now they're turned down. If we see the first couple of attempts, if the spiders try to regain 21 and it's sold and it rejects, that will strengthen the case of maybe this will be a new downtrend in the short term. If you do get that tape, you could maybe swing trade short positions. You could day trade, look for breakdowns to follow through to the downside, look for rips to sell. So basically, just to wrap it all up, there's three different things that can occur. You can have an uptrend. The 8 is above the 21, nice steep slope. You could swing trade 4 or 5 positions. You can buy strength intraday. You can buy dips. Or you could have flat EMAs. There's no trend, making swing trading pretty difficult. You probably shouldn't do it. And intraday, you should be open to playing long and shorts, but don't be so quick to buy strength or sell weakness because you still may be in a more range-bound environment, and that can be pretty frustrating. And I think that's where we are right now. I think that's why myself on the floor, I'm sure you guys at home, it hasn't been all that easy the last couple days, the last couple weeks, because I think we're entering more of a range-bound tape to where we were used to that uptrend. Now it's kind of like the game is changing. The third option is if we go into a downtrend, the 8 and 21 develop steep slope to the downside, and at that point you can adjust, maybe swing trade short positions, look to day trade breakdowns, sell rips, and knowing the three different environments that can occur, you can make your decisions based on something that's black and white and on the chart. In this case, my moving averages are blue and red, so I guess it's blue and red. Just follow how do the lines look. So don't try to interpret what the news is. Follow what the moving averages are telling you, and it's a good way to just protect yourself from making stupid mistakes, doing too much or doing too little, expecting too much from the market in general. And knowing this, you know when to scale it up or scale it back. Right? And right now, unfortunately, we're in that scale down where that range bound to where the spiders are still trying to decide whether we're going to continue up or maybe trade down in the near term. So for right now, I think you do less and wait for the moving averages to tell you when you should turn it on. I hope that's helpful today. If you're interested in hearing more from the Active Trader Room, come and check us out. Have a great weekend, and I'll see everyone back here on Monday. Thanks.